Are you just as optimistic about another commodity boom for next year?
I think I am. I think certainly in the second half of the year, we see Brent moving above $100 a barrel. I think it could be somewhat sideways, really, for the next couple of quarters, given where we see supply and demand. But, you've really got a number of factors at play here. First of all, the China reopening, and I think that's moving a bit quicker than we've expected following the unrest that we've seen in China. But secondly, on the supply side, we've got the EU embargo coming on December the 5th on crude, and then on products on February the 5th. Yeah. And then, of course, the price caps as well, that's going to have a very significant impact, potentially, on Russian shipments, also coming on December the 5th. So a big week ahead.
I mean, there's talk that they shifted this OPEC Plus meeting to virtual because they're not going to do anything. Is it also warranted that they maybe take a pause here, given that those price caps on Russian oil, that takes effect on Monday as well? Exactly.
So, I mean, I think they're going to watch and see what the G7 really comes out with. There's just so much uncertainty around really how much physical disruption we'll see to Russian crude supply. So I think the fact that they're doing this online suggests that they're really going to roll over current policy and then look at things again in the new year once they get a bit more data on supply.
Neil, David here. So what is then your assumption on, well, let's run through, I guess, 1, 2 scenarios. What is your assumption on Russian caps on Russian crude? That's one part, because that affects then what OPEC Plus might do at the meeting after this one that's coming up.
Yeah, so, despite everything that's happened in Ukraine, Russian crude production this year has actually been flat. So we haven't seen any supply disruption. We have seen reduced exports to Europe, and Russia's currently exporting about 2 million barrels a day into Europe. So, if you shot that off completely, the worst case would be a 2 million barrel reduction. But of course, Russia is going to reroute that crude, to other markets. But it's going to be difficult because shipping it to Asia will take 45, 60 days to ship it out to India, China, compared with about 10 days into Europe. So it's going to take a lot more tankers really to move that oil, and as a result, you're going to see some disruption. If you look at the Russian budget, which came out, they're assuming about 500,000 barrels a day reduced crude output next year. The IEA has it penciled in around 1.2 to 1.4 million barrels a day. We think roughly 1 million barrels a day is what our expectation in terms of the loss in Russian crude output. But it's highly uncertain, just given the unprecedented nature of these sanctions.
Neil, well, sorry, I couldn't hear you because my producer was talking to me. So I think your final thought there was, what Russia might then do. Will OPEC Plus then need to offset that, whatever effectively that loss of supply will be?
I think they could do. If we saw, let's say, demand coming in as expected next year, 1.5 million barrels of growth, and if we saw 1 million barrels a day coming off Russia, that's a 2.5 million barrels a day gap in the market. Now, some of that will be filled with increased non-OPEC supply, but we've seen a 20% reduction in U.S. crude production estimates in terms of growth this year. So oil production outside of OPEC is certainly not growing as quickly. And so I think OPEC might be forced to act, but I think they would wait and see exactly what the impact was first.
China reopening, you're saying, could happen sooner than expected. How much pent-up demand is there for oil from China, you think?
I think it's significant. There's very little, certainly, air travel happening domestically in China. You're seeing road mobility down significantly. So I think in terms of gasoline, jet fuel demand, you could be looking at close to 700,000 barrels a day growth next year. We've actually seen negative oil demand from China this year, which is almost, we haven't seen that in 20 years. So this is a really big drop in demand we've seen this year. But of course, if China gets going next year, that's really going to turn things around.
Do you think then the concerns about oversupply in the market, is that still justified here? And can we actually rule out that OPEC might not cut production?
Well, I think OPEC's going to, roll over. I think, they're targeting a range, I think, between $80 and $100 a barrel. So I think if things got too far ahead of $100 a barrel, then I think they would make some adjustments. But, I think OPEC really, are quite happy with where pricing is right now. But, there is the downside risk of a recession, potentially, Russia being able to move much more oil than people think. And so I think, that's something that OPEC will have to watch very carefully.
Neil, just to pivot, still staying in energy, obviously, here, we are up against winter, quite literally, in a few weeks. How well stocked do you think is Europe right now, just looking at this whole situation? And it could change, obviously, with the weather.
On gas, we've seen, obviously, Europe do a tremendous job in terms of filling gas inventories coming into this winter, which has seen prices soften. We've now got a real cold front sweeping through North China, certainly the temperature dropping in Hong Kong. And so we're starting to see certainly heating demand for gas turn up. And, gas inventories are starting to be drained, certainly in Europe on this colder weather that we're also seeing there. I think as we go into next year, it's really, there is a risk that we're going to see another big spike in prices. A lot depends on where we exit in March in terms of inventories. But Nord Stream was just shut down in September. There's very little new LNG capacity coming online. And so I think you're going to see a potential another squeeze if we see a cold winter ahead. Of course, a lot depends on the Russia-Ukraine war and whether or not that continues throughout next year. But the setup for next year is also, I think, looking very, very tight.
Well, Neil, since you mentioned it, I mean, the cold front in northwest China. I was looking at the weather projections for, say, Xinjiang. I mean, we're 10 degrees below where we usually are for this time of the year. Is there anything we need to watch as far as China's stockpiles are concerned ahead of the winter?
Yeah, so, China, like a lot of other countries, replenished gas inventories coming into the winter. But gas inventories tend to be actually quite low in China, about 7-8% of demand. China's banned the re-export of LNG cargoes, so it's going to be competing more with Europe, for LNG. And if we see a reopening in China, I think, that increase in gas demand means more competition between China and Europe for what is, pretty tight gas market. So I think that certainly could push prices higher.